SPAR Group's half-year earnings have been hit by a double whammy, a botched IT rollout at its key KwaZulu-Natal distribution centre and high interest rates, both factors contributing to cost increases that outstrip turnover growth. And joining me now is Angelo Swartz. He's CEO of SPAR Group. Thanks so much, Angelo, for joining us today. Well, you've been with the group 17 years, the past year perhaps one of the most difficult, having assumed your responsibilities just in October. I've got to ask you, tough time to be at the helm?
It has been, certainly been that. It's been a very interesting time, probably, as the, I guess as the Greek saying goes, or Greek curse goes, I wish you interesting times. That being said, I think it's very gratifying time to be in the business, and being able to add value at a time that the business really needs it. And I think we've done a great job in the first 6 months since I've taken over, and really confident about where we're going. I think we've dealt with a lot of issues that really needed dealing with in the business, and now on to bigger and better things, hopefully.
Yeah. Chief amongst the lot, Angelo, has been the software rollout issues, and that's proven to be a continuous challenge. In fact, you've gone as far as having labeled it a strategic mistake to roll it out the way you did, biggest region first. So what went wrong and how much has it cost you?
Yeah, so it really has been a misstep on our side. Not very well handled initially, although I think our teams are coming to grips with it now. So in the immediate aftermath of the rollout, I think we had 3 key issues. One was that our customers, being store owners, and the impact they felt at their back doors, in particular whether they were getting their deliveries in full and on time, and we really let the ball drop there. And I'm glad to say that we've got our arms around that now and been able to manage that to a point where the impact on our retailers on a day-to-day basis has been limited and almost back to normal. The second issue was that productivity in our warehouses was nowhere near the level they were pre the implementation. And also, thankfully, in the last few months, we've been able to bring that under control, and productivity in our KZN facility now back to normal. And the last issue was a drop in gross profit, and unfortunately that issue has persisted. So whilst we're nearing back to normality with both the other issues, the gross profit issue hasn't been resolved, and we have identified what the issues are impacting the gross profits, and we are deploying a solution for that towards the end of August. The code is being written at the moment, and we anticipate through the month of September and going into the end of the year that we start approaching normal levels of service and margin in that business.
Yeah. Until you get to that point, you're not only suffering, lost gross margin, but it's impeding the group's ability to predict demand and manage availability of stock as well. And, that's not ideal in an already challenging socioeconomic climate where consumers are, pulling their purse strings tighter, changing their buying patterns as well. We've run through the profitability impact, but how does this shift your business approach, if at all?
Yeah, so what we've had to do is compensate for that by increasing our stock and our inventory levels, really. So our inventory levels in our KZN facility, between 200 and 250 million, higher than they would be in an ideal situation. So that is a challenge, but it's one our business has been able to take on, and I think we've brought that under control, albeit that the working capital impact hasn't been ideal. But we are returning to normal levels of stock now and normal levels of predictability. As I say, the one overhang that we really need to manage is that gross margin impact.
Amidst it all, Angelo, which area of the business's financials are offering support right now? And, let's take it beyond the traditional SPAR supermarkets if we're looking at Tops, Build It, and S-Buys.
So both our pharmaceutical business, S-Buys, and our top liquor outlets have performed exceptionally well during this period. Airspace growing at in excess of 15%, and our liquor business growing in excess of 12%. That's been a real boon to the business as a whole. Our Build It business, albeit off a very strong base, showing market leading growth, and although that being slightly negative at wholesale, very positive at retail, and ahead of where the competitors are in a very tough building materials sector as it is at the moment.
Yeah. Post-elections, with the country at a turning point in politics, to what extent do you see the new political era we're entering in South Africa affecting your local operations? Because that's where your focus is now, right? On home base.
Yes. So, we are very gratified to see the way that our political system has held up with the changing circumstance, and very proud to be South African. I think our democratic institutions have shown to be strong and resilient, and that can only be good for us. I think there's always, given the backdrop and the July unrest in 2021, that is something that is foremost in our minds, and hoping for stability in KZN in particular. For now, it seems as if the picture is positive, and we hope that continues. Beyond that, I think for the future of SA Inc., the maturity shown by the political system is something that we should all be very proud of.
Like I say, with your focus on the home market now, good news is that you will be exiting Poland sooner rather than later, having found a buyer for your operations there after 4 loss-making years. Angelo, how much relief does that bring with it?
A huge amount of relief, I think, particularly for our investors. But we've poured a lot of blood, sweat and tears into that business. In some ways, very proud of what we've achieved there, but that business has been a cash drain on the South African business, and relieved to be nearing the end of that particular journey. In fact, we've been fortunate in this last period where all our foreign operations have performed exceptionally well, strong operating growth, profit growth in all our foreign territories, including Poland, oddly enough. So we looking forward quite positively in that space.
Okay, well, Angelo, let's leave it there. Thanks so much for having joined us today. And of course, we'll be tracking developments as they unfold. Angelo Swartz is CEO of the SPAR Group.
Thank you very much, Alishia.